What if the money you spent your entire life saving doesn't hold the same power 5 years from now? For decades, the US dollar has been the backbone of the global economy. It's survived wars, recessions, political crises, and financial shocks. But today, something feels different. Countries are reducing dollar dependence. Gold demand is rising. Global alliances are shifting. So the real question is the dollar losing power? After World War II, the United States emerged as the dominant economic power. In 1944, the global financial system was redesigned. The US dollar became the anchor of international trade. At first, it was backed by gold. Even after the gold standard ended in 1971, the dollar remained dominant. Oil was priced in dollars. International trade was settled in dollars. Central banks stored dollars as reserves. The dollar wasn't just currency, it was influence. Despite concerns, the dollar remains the primary global reserve currency. During global crises, investors still rush toward US Treasury bonds. The American economy remains innovative and highly productive. This is not a collapse story. It's a story about gradual shifts in global power. And gradual changes are harder to notice, but just as important. Over the past decade, several nations have taken steps to reduce reliance on the dollar. Some countries are settling trade in local currencies. The BRICS alliance has discussed building alternative financial systems. Meanwhile, central banks worldwide are buying gold at record levels. Why? Because gold carries no political allegiance. It is neutral. Another concern is the size of US national debt. Debt levels are historically high. Interest payments are increasing. Government spending continues to expand. While the US has managed debt before, higher debt combined with inflation creates long-term pressure. This doesn't mean collapse, but it does mean vulnerability. Retirees don't just worry about currency dominance, they worry about purchasing power. When inflation rises, the value of money decreases. Groceries cost more, healthcare costs more, utilities and insurance rise. Even if retirement income stays stable, its real-world value may decline. This is where the real impact is felt. If you are between 55 and 70, your financial timeline is different. You may not have 20 years to recover from major downturns. That's why global currency shifts matter. A weaker dollar internationally could eventually affect investment returns, bond yields, stock market stability, cost of imported goods. Preparation becomes more important than prediction. Looking toward 2030, there are 3 realistic outcomes. First, the dollar remains dominant and fears fade. Second, the dollar shares global power with other currencies in a multipolar system. Third, a financial shock accelerates change faster than expected. History shows us that transitions usually happen slowly, until suddenly they don't. This is not about panic. It's about awareness. Historically, resilient retirees focus on diversification, reducing unnecessary debt, holding balanced portfolios, staying informed without reacting emotionally. Financial history rewards preparation, not fear. The US dollar built the modern global economy. But no financial system remains untouched forever. The question is not, is the dollar collapsing? The real question is, are you prepared for a changing world before 2030? If you found this analysis valuable, Subscribe to the Business Archive for deeper insights into global finance, business history, and economic power shifts. And now I want to hear from you. Do you believe the US dollar will remain dominant, or are we entering a new financial era? Share your thoughts in the comments below. Your perspective matters, because the future of money affects us all.